Hey everyone, so today I'm looking at a company called Marimed, and it actually on my tier list of the MSOs in the cannabis space, multi-state operators, that's what MSO stands for. This might get the highest ranking so far. Let's jump into today's video, but first you're going to have to access this on the OTC markets, which you're going to need Interactive Brokers for. There's a link in the description below for that if you're really interested in getting into any of the cannabis stocks or investing in general. Interactive Brokers is the one that I use. I personally recommend it. It's by far the best brokerage account out there. So, all right, let's jump into Marimed and why I think it's quite special. So compared to all the other public dispensaries in the US, this is actually on the smaller scale. As you can see, they're in 4 states with 10 dispensaries, but it's actually just about to go into this number actually should be 6. By the time you're watching this video, it'll be 6 because they're going into Ohio and Missouri. And the expansion plan is actually part of the thesis that I'm going to present today. So something they've done recently, which I think is quite savvy, is they bought a Massachusetts dispensary out of receivership court. So they got a really good deal on that. And with possibly more of these coming along over the next sort of small 3, 6, 12-month period, according to the CEO, John Levine. The previous CEO was Bob Fireman, and he actually passed away in 2022. The co-founder, John Levine, who has taken over the reins as the current CEO, they're basing their operations in Massachusetts. Now, if you're just an MSO with only dispensaries where you get hit hard with taxes. See, cannabis is actually taxed on gross profit, not net profit. Now, that makes a huge difference because it means all the expenses to running the business, you've got to pay tax first and then take out all the expenses, which is very debilitating for the space. It makes it very difficult to turn a profit. Now, a lot of the cannabis thesis relies on what they call the 280E regulations being lifted in the future. They're quite ludicrous. They're looking like that state by state they're going to start lifting these requirements, but there is a risk that it just never happens. And if it never happens, these companies are never going to make huge amounts of profit. But if it does happen, which it looks likely, these businesses are going to be printing money because all of a sudden they're going to be taxed on their net profit, not on their gross profit, and that makes a huge difference in accounting. Now, Marimed are not just a regular MSO. They play in the wholesale market. They have advisory services and real estate to help all these things together minimize their tax issue. John Levine has a real estate background personally, and that is helping tighten up the balance sheet. I think it's a benefit to have that sort of real estate background and that discipline. And they've been doing this since 2008, and it isn't some new venture, and it has been built slowly and carefully. And this has, I think, set them up really well. So I like this mixed approach to the space, and yet a strong focus on making money, not just growing top line revenue or doing a land grab and trying to get into as many different states and get as many licenses as they can. They've been specific about the licenses they've been targeting and specific about the states they've been expanding into. So this slow and steady approach, I think they seem to be astute in making good, sensible, patient decisions. And the more I look into the space, the more I realize that there's a lack of this quality, disciplined management. John and Susan, who are running the show here, they come across as quite sensible and patient. And like I said earlier, they're focusing on these limited license states, which at least that gives them some barrier to competition. And things are kind of about to change here at Marimed. But if I was to look at the exciting things about Marimed, they've got in Massachusetts, they're adding 1 more dispensary and another going to be turned on soon. Illinois, they're adding another. Maryland's about to go adult use, and that's going to be a big boon to their Maryland operations. They're entering Missouri. They've already entered into Ohio earlier this year. It was in late June. Now, based on how many stores they had, which I showed you earlier, adding 2, 3, 4, 5 stores increases their business size by 20, 30, 40, 50%. And that's just in the short term. Then you got Maryland that's going adult use, which will be a big boost for that particular location. There are other projects that are happening shortly as well, including the relaunch in Illinois of a brand called Betty's Eddies. This is actually a brand that people know about. In the world of unknown brands and new brands hitting the shelves every week, Betty's Eddies are an edible that have a bit of a cult following. I'm not going to add this into my estimates per se, but it's definitely another strength that they have, and it's probably one of the strongest brands I've seen in the entire cannabis market so far. Now, something that John talks about a lot in all of the different interviews is that they pride themselves in consistency, and this is exactly what I've been worried about with the big MSOs. See, those other MSOs, I don't hear them talking about this complete focus on consistency. And I think that it is how you build a reputation and a brand. See, you're able to produce the same quality time and time again. Imagine like a I don't know, like a painkiller, for example, like Panadol. Imagine if you were taking the Panadol tablet and to relieve a headache, and sometimes it worked and sometimes it didn't. Sometimes it was too strong and sometimes it wasn't strong enough. You would lose trust in buying Panadol the next time. You'd want to try something else that was going to be more reliable. Or what about a can of Coke? Imagine if it tasted different every third can of Coke you got. You would immediately get skeptical about what the can that you're going to buy next, whether it's going to be any good or not. Or ice cream, if the flavors were, you thought you were getting vanilla and it was a little bit off and it just didn't taste the same each time, and there was no consistency, you would have no brand loyalty. And I think that's really important. If you are going down the brand path, you've got to have consistency. But if you were to compare Marimed with all the other MSOs who are trying to do the same thing, I just think they're just all in a retail game, and this is an ultra competitive space. It's not just ultra competitive in the legal market, but you've got the illegal market as well. It is a hard business to run. It's as simple as that. It's just not like other industries. I mean, on the face of it, why would you even bother with an industry that is significantly more complicated, that has more regulations on it, a lot of competition, and considering there's millions of different companies out there and hundreds of different industries, why am I focusing on cannabis in particular? Well, I think what cannabis has going for it right now is that just the severely depressed prices, like the actual bargains that are available. And then there's this complete lack of understanding and avoidance by most investors. It's just been left for dead. And I think amongst all of this mess, there are actually some really good companies to focus in on, and that can be really interesting compounders for like the next 5, 10, 15 years. And I think by buying them at such depressed prices, you get this massive tailwind, plus all these catalysts that are coming along as well in the future. It doesn't feel like too many things can have to go right for this to be a big winner. So my focus is I'm looking on the best long-term minded, patient, focused, conservative, and skilled operators in the space. These will be the ones that will be able to take advantage of the cycle change, and more importantly, they'll be able to live to see the cycle change. And although I think cannabis is a little bit cyclical, it isn't like oil where the overall demand is actually growing for cannabis, and the market size politically is getting bigger all the time as well as more states start to open up. Now, Marimed is still relatively small, but they've got a lot of experience, and I think they're in a really good box seat essentially to take advantage of this rising tide, and I don't think it's going to be a small tide. Now, I think they're actually a potentially 100 baggers here in this little industry, and I just think there's hardly anyone looking for them. Over the last 2 years, the weaker hands have been flushed out. Prices have fallen very dramatically, 80, 90% in some cases for some of the MSOs. But when this turns, I think the money is going to come back, and a lot of people are going to feel like they're missing out. There will be hype around it. There will be speculation. When it comes, it'll come hard. So I just think that studying the best operators now is quite opportunistic, but I also think it's a good use of my time. And speaking of time, well, I guess time will tell all. I could easily be wrong here. I'm not going to bet too much on it, but a reasonable bet in the space is something that I am looking at. And back to Marimed, another thing John mentioned a few times is his disgust at the high interest rates that there are in the industry. Sometimes it's up above 10% above what a normal bank rate loan would be. So let's say you're borrowing with a traditional finance, you might get 8% to borrow money. Cannabis stocks are getting something like 18%, 20%, things like that. John, the CEO, said it was making him sick to think about the high rates they had to pay, which I kind of tend to agree. Eventually, they were able to get money at about 5% above the market, which is not attractive comparatively to other industries, but comparatively in the industry itself was very attractive. And I'm glad that they have this approach to debt, as it's something they don't want to use only if it makes serious sense. Talking about stock-based comp as well, looks like it fluctuates between 1 and 6 million a year, depending on the year. So that equals about 1 to 4%, which is sort of on the lower end of stock-based comp numbers in the space. I don't love stock-based comp, but I can live with a little if it aligns the employees and the C-suite without diluting everyone else dramatically. So 1 to 4%, I can handle that. Figuring out a valuation is the next task that I have. And so this is pretty tough, and this is sort of how I'm thinking about it. So currently the enterprise value to EBIT is about 12x. Now that's probably fair enough, but we are in these trough earnings and things are really tough out there. But I think people are missing what's just about to happen. So in the next 6 to 18 months, Not only are they going to 20 to 50% increase their store count, but they also have this big brand in Betty's Eddies going back into Illinois. You've got Maryland going adult use, and the expansion into Ohio and Missouri to come online and contribute to the next 12 months. I think they have a lot of growth about to come through, and the size of the business I can see easily doubling in the 6 to 18 month period. So I'm not talking about the stock price doubling in that period of time. I'm not sure, but I think the core business itself is going to be about twice as big and twice as profitable in the next 12 to 18 months. Now, in saying all that, that's not counting any of the usual catalysts in the space like safe banking changes, 280E changes, more states legalizing and federal descheduling, and just market dynamics overall just improving. Now, something I'll have to be a little critical of, not just with Marimed, but a lot of the MSOs and a lot of the cannabis space is when they report numbers, they do like adjustments. They're guiding for about $35 million in adjusted earnings, but I just don't like adjusted numbers, especially since I don't think they're adjusting all the right things. For example, they've adjusted out depreciation, which I think is an expense that they shouldn't be adjusting out. They adjust out stock-based comp. There's other things that they adjust out. So if you're just looking at their adjusted numbers, we're paying actually about 5 times adjusted earnings for 2023. Now, I don't like all of those adjustments, so I think maybe we're paying more like 7, maybe 10 times their earnings estimates of 2023. So if the business is to double in the next 6 to 18 months, which isn't radical and not requiring any big catalysts or anything like that, then say in 18 months' time, we are paying maybe 3 to 5 times their future earnings. And I don't like valuing things like this, but it's obviously undervalued if they can just continue. So the reason for the depressed price is because people have just given up hope in the cannabis space altogether. They're hoping for these big catalysts to come through, but internally, Marimed have their own growth catalysts that they're in control of, and if these things play out, which they still need to play out, so it's not set in stone or anything like that, I think this is a great way to play the cannabis industry as a whole because the other big catalysts are then just upside. So I like that for Marimed, they're conservative, they're a growing business, they've got good brands, they've got diversified operations, but they're small enough that opening new stores actually makes quite a big difference. I mean, truly, for example, if they aim to open 10 stores in 2023, which was their stated goal, that's nice, but that's about a 5% increase to their overall store count. That's not a lot of growth. Whereas Marimed opening just 3 stores, proportionally, that's massive. And to keep this idea a little bit more secure, the states that they are operating in, they are limited license states, and I think this reduces some of the risk as well. Now, turning to some of their financial metrics, we've got gross margins at about 48%, which is about industry average. We've got operating margins at about 15%, which are above industry average. Market cap at about 150 mil, price to sales at about 1.1. EV to EBIT at 12, EV to EBITDA at about 9x. Why are they unique? Well, I guess they're still a retailer, so I don't think they're that unique, but they do have that great brand. I think they're a disciplined operator, and what I really like is a clear path to growth, something that I can wrap my head around and easily understand. It's quite logical to me. I still don't think there's not much unique about this business though. Being a good operator and a good disciplined operator is a competitive advantage, don't get me wrong. Is that going to hold up over 10 years? Well, possibly. It's not some serious competitive advantage that I can hang my hat on though. Regarding debt, they don't have too much of that. Stock-based comp is medium. Their salaries are medium. They've got high insider ownership, which is great to see. And their intangibles to asset number, that's something that I've been focusing a little bit on here in the space is I don't like if a lot of the MSOs value their licenses really highly and it makes up a huge proportion of their net assets. For Marimed, they've only got 17% of their total assets are considered intangibles, and that's really low, and that's very attractive. If you look at some of the other MSOs, they're sort of above 50% of their assets are actually tied up in intangibles, and I think those intangible valuations are very misleading. So overall, my opinion so far on Marimed is that I think they're far better than the other bigger MSOs. I like that I don't have to rely on big government changes to move this one higher. I am confident that they will grow without getting into trouble just by continuing the plan that they have. Then big regulation changes and things like that, that's just upside. I think this is far a safer investment than the other bigger MSOs that I've looked at so far, but there are still some things I don't love. It's a competitive space. It's a hard business they're in. I don't think they have this amazingly significant competitive advantage. I was at least able to identify a few things, which is good. And like having a focus on limited license states, I think also helps them in the short to medium term. Okay, so where am I going to put Marimed on my tier list? Well, I think they're definitely better than the other MSOs so far. I'm going to put them at the top of the B tier at the moment. I don't think they deserve to be in the A tier just based on the competitive advantages and things I highlighted earlier, but I think they're superior to the others so far. They're the best company that I've covered. So there you go, Marimed, something very interesting for you to maybe take a look at. I hope you've enjoyed this kind of deep dive into Marimed. It went a lot longer than I expected. I apologize. Next video, we'll get into air wellness. So stay tuned for that. I hope you're enjoying. I'll see you then.